Good morning, traders, and welcome. Everything that I need to know for the week ahead, I can get from this blue box that you see on the screen right here. This blue box is going to tell me how to play my trades this week, and we're going to find it out this morning. Let me explain a bit more. My name is Charles. I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. Big thank you to Bookmap for putting this stream together for us here today. If you are interested in learning more about the ways that I trade or approach markets, check out marketsandmind.com, and you can learn more there. Okay. So let's dive right in. What am I talking about with this blue box? What does this mean and why does it matter? Well, this was what we call a balance area. A balance area is a range that the market gets stuck in for a period of days. Okay. The market was stuck in this range a couple of weeks ago, and then we spent the entire week last week back testing it over and over again. We back tested it not just once, not just twice, but 3 times last week. We tried to come back into this range and we could not stay down inside the range. So each time you see these wicks, each time that the market tried to poke back down into balance, it popped right back up and out. But today we are opening inside that balance area and things are very, very different. Why are things different? Well, first and foremost, anytime you have a support level in the market, the more times you poke at that level, testing it for support, and it holds, the more likely the next one is to fail, because it's like you're poking through a semi-permeable membrane. And so each time you poke at it, you make it a little weaker, a little weaker, a little weaker, and eventually you break through. So the fact that we poked so many times last week at this balance area high means that one of these pokes is going to poke through. Okay. Secondly, the first order of business for the market this morning is actually to go up. The market is going to open with a gap down. The gap down is from Thursday's low. So the gap fill would be getting to Thursday's low. And so that's a reason for the market to go up this morning, right? But look at where Thursday's low is, right smack dab in line with that balance area high. So traders could go long this morning. The market could start going up. And then when they get that gap fill and they enter into Friday's range, those longs start to take profits, right? That is also somewhere where shorts that don't want to chase price, they don't want to FOMO in at the lows, will start to get in at Thursday's low. Well, that is magically that balance area high. So today, and really for this week or for the next few days, and again, all of this, the White House can say anything at any moment and all of this goes out the window, but assuming that nothing major macro happens, as long as we stay below 52.88, my belief is this market is heading much lower. Okay. And I could go back and show you on the daily. This happens over and over and over again, where the market creates a balance area. Oops, give me 1 second here. The market creates a balance area, breaks out. When it comes back to back tested, if it does not find support and get a bounce, it fails and it heads to the opposite end of that bounce. Okay. This is extremely common to happen. It's like pure magic. It's like the market giving you a gift. It's like the market saying, hey, we're going to make this easy on you. If we can't bounce up and out of here, we're going to head all the way back down to the opposite end. Now there's one trick. And the trick is it will often grind and grind and grind right at that balance area high, as it did on Wednesday and Thursday of last week. Okay. And it did at the overnight over the weekend. And so there's a chance we do that again today. There's a chance we fill the gap, get up into yesterday's range, and then we just kind of go sideways today. That is definitely a very real, very highly probable thing that could happen. Unless it does, the market is going lower. So I am extremely bearish today. I think even if we get a gap fill, so even if the initial first move of the market is to the upside, I think we will find resistance and head much lower. I am obsessively watching this 52.88 level. The more time that the market spends below 88, the more volume it brings in below 88, the more likely that we are heading much lower. So what is my target to the downside? Well, Not that the market has to make the move in a day right away, right? It might take 3 or 4 days to get down there. We might get down there in an hour. I don't know. That's the thing. We can never predict the timing of when the market will do something. But as long as we remain below 52.88, my target to the downside is 49.79. This is a poor low in need of repair. So the market has unfinished business down here that it wants to conclude. All right. It never got a chance to come back and repair this poor reference. So if it's got momentum down, we get a look above and fail the balance area high, and we're getting that momentum down. An obvious target, again, for a swing trade, not a day trade, an obvious target is 49.79, where the market is looking to repair that poor reference. That is likely where, if it is going to, find buyers and turn around and come back up, that's where it would do it. Okay. So I am bearish today. There's just no two ways about it. I am not saying we can't have a sideways day. I'm not saying we can't even have an up day. I'm just saying I would not be bullish in any way, shape, or form unless we filled the gap and then stayed inside Thursday's range and continued to spend time and bring in volume up there. Because otherwise, I think the initial move up this morning will be a fake out to get everyone long just in time to sweep the order books and take the market lower. Okay. I got my bear suit on. Any questions on any of that from the chat? One thing I love to do on a Monday morning is go back and do Jim Dalton's top-down approach. So I start with the monthly candles, then I take a look at the weekly, then I take a look at the daily. And the question is simply, are there insights I might see on a higher time frame that might, influence my intraday? So right now on the monthly, there is nothing. It's trending lower, but we got the big wick. It could go either way. So no information on the monthly. Let's take a look at the weekly. So the weekly is showing us that right now we are balancing on a multi-week time frame. Why are we balancing on a multi-week time frame? Well, last week we did not make a higher high or a higher low on the weekly time frame. We stayed inside the previous week's candle. That is a sign of uncertainty. It is a sign that over the weeks ahead, the market is trying to figure out what it wants to do. It doesn't really know. But what do we have forming here? If this week we do rotate down to the opposite end of that old daily balance area, what will we have? Weekly balance, right? We'll have a weekly balance area. And so that will tell us we have to spend however many weeks we have to spend going sideways until we can break out one way or another on a weekly range. So I would say right now, the weekly is the monthly is telling us nothing. It's completely no edge whatsoever. The weekly is a little more bearish because we are opening with a new lower low. Looks like we're right on the weekly low. So that's a little bit bearish, but again, still just balance. Okay. Because of the inside week. So all of these things are lining up to tell us there's a lot of uncertainty in the market. The market doesn't really know where it wants to go or what it wants to do. If a market doesn't know what to do, what is it going to do? It's going to go sideways, right? Where is a great place to go sideways? In this area where we've been going sideways. So I believe we are re-entering this old balance area. I believe the odds are we are heading down towards the opposite end. Again, unless we get up into Thursday's range today and spend a lot of time and bring in a lot of volume up there. Bear. And the one context that I've got to make sure that I drill into your heads, if you're thinking Charles is bearish, let me go short right now, right this minute, is first they will try to fill the gap. First, they will try to get to Thursday's lows before they make any move to the downside. They may also spend the whole day just going sideways. We may get a intraday day today that looks a lot like Thursday, where the market just grinds and grinds and grinds and goes sideways. Okay? So if that happens, don't be mad at me. That doesn't change a thing. My analysis is simply, does the market spend time and bring in volume below that balance area high? The more time and the more volume, the more likely the market is going lower in the days ahead. Good morning to Rich. Welcome. Will is here. Percy in the house. Trevor, good morning to you. And Nap is here. Welcome, welcome. If you have not yet, please smash that like button. Those thumbs up really help Bookmap to send some new people to their channel. And of course, we want to do that because they're nice enough to put this content together for you. You ought to be nice enough to push one little button for them. One little thumbs up for the Bookmap. If you were watching this from the Discord, head to the Futures-Charles tab, and you can ask me questions there. I see somebody wrote a question this morning. I'm going to write out an answer to that. So if Forlot, thank you. If Forlot, thank you, is listening, I will get to your question. I'm going to type it out. I'll do it later on today when things have quieted down. But if anybody has any questions for me during the live stream and you're watching from the Discord, just put them in there. Futures-Charles tab. Good morning to DNK. Welcome, welcome. Okay, so you all know how I feel. I am bearish today as long as we remain below 52.88. Let's take a quick look at the NQ. I have a feeling it's doing exactly the same thing as the ES, as they have been pretty in sync as of late. Let's dive in and find out here. Oh, yeah. So let me actually look at this on the daily chart. It'll be a little cleaner. Okay. Yeah, so it's in literally identical situation. You got your balance area from 2 weeks ago down here. Looks like that. Okay. Exactly the same as the ES. Not once, not twice, but 3 times you've tested that balance area high. It has not been able to give you the support for that big move. So what you have to remember is, what was this candle right here? What caused this big move? The market was going sideways. It was balancing. It was trying to figure out what it wanted to do next. It was very bearish. Everyone was feeling like the world was coming to an end. And then Trump came out and said, pause on tariffs. That caused this massive emotional reaction to the pause on tariffs. Now, we came back after that and back tested that balance area high. That absolutely should have. If the market really was bullish, if they really did want to turn around and start heading back up towards all-time highs, that support should have done it. But we couldn't even get back above those emotional highs. We couldn't even get it back above that high that we made purely as a reaction. So now that we're coming down again and we found support but got no bounce, none at all, that is why I'm bearish. That is why I'm thinking we need to put the market on sale. We need to bring in some discount shoppers. People aren't willing to pay $1,800 for the NASDAQ right now. That's just too expensive in their mind. They had their chance multiple times last week and just no one wanted to buy it. At least not enough to create momentum to the upside. So if you don't have enough buyers, what does the market got to do? It's got to go cheaper. It's got to have that Labor Day weekend sale, that post-Easter weekend sale. Put those stocks on discount, and then you start to bring in those shoppers for the next bounce. So I put the NQ in exactly the same position as the ES. Let me take a look on market profile to come up with exact levels here. So yeah, I would say anything below 18,300, that is bearish. So that is pretty much your balance area high. The market wants to stay below 18,300. If it is going to continue lower, the more time, the more volume that it brings in today below 18,300, the more likely that it's heading down towards 17,222 in the days ahead. Okay. Bear. Now, again, both markets gap down. So the first order of business for the market is to fill the gap. It's first to go up, but then we'll find out what comes next. Bear. Rich says, can you explain the left chart, the volume profile? Do you break up the daily sessions? Yes, it's a great question. So What you're looking at over here on the left side of the screen, this is a market profile chart. This basically combines volume profile and TPOs. So volume and time combined together to give you an understanding of what the market is doing. The chart over here on the right, that is the Bookmap chart. So that is focused on order flow. There's basically two different charts that I look at. One is the TraderMap Pro chart. You can also use the TraderMap Lite chart. That's going to be the one that filters out a lot of the bracket bots. And then over here, you'll see me click over to this chart. This is a chart that shows the bracket bots, although I don't see any right now. A little bit, not a lot. And so this is the chart that I use to look at the stops and iceberg setting. So that is simply to figure out, are there icebergs in the market? Where are they? Are they above or below price? You know, how many are they? Are they close to price? Are they far away? So on and so forth. And then stops. Are a lot of stops getting taken out at a particular level? As far as my market profile chart is concerned, the way I have it set up is that the profiles are stretched out. Let me actually reset this real quick. The profiles are stretched out between overnight and regular trading hours. I define regular trading hours as stock market hours. Okay. I know the futures trade outside of those hours, but I look at them as from 9:30 a.m. to 4 p.m. when the larger market is open, because most of what we see in the futures market is merely arbitrage to the underlying assets. So when the underlying assets stop trading, when the NASDAQ and the NYSE close at the end of the day, a lot of the influence on the larger market disappears. And so that doesn't mean the market can't make big moves in the overnight. Of course it can, but they are much less predictable than the regular trading hours. And the behaviors are totally different. It functions differently after 4 p.m. and until 9:30 a.m. and then between 9:30 and 4. So the purple profiles that you see, where you got the dark blue box with the purple letters and stuff inside of it, those are the regular trading hours. So this is the regular trading hours from Thursday of last week. This is Wednesday of last week. Okay. And then the light blue, those are the overnights. So that was the night after Wednesday to Thursday. And then of course, because the market was closed, on Friday, we got this kind of funky looking profile for the overnight range over the weekend. But that basically just represents the weekend's trade. So when you see the opening bell ring, you'll see a new profile start to form here. And when we look at the market profile, the reason that we choose to use market profile as opposed to just using candlesticks is that it allows us to see the market in 3 dimensions, right? All the candlestick shows us is over a given period of time. So, these are daily candlesticks. Over a given period of time, this was the high of the day. This was the low of the day. And in this case, it was a, spinning top. So there's not much to see there, but the bar is the distance between the opening and the closing price. Okay. So you can see where the market went, on a particular time frame, whether you have it on 1 minute candles or 1 day candles, it doesn't matter, on that particular time frame. And you can see the total amount of volume that traded. So that's important. It's nice to see the total amount of volume that traded in a particular time. That way you can tell when there's more or less volume entering the market. It's nice to know those exact levels. Where is the high and the low of a particular candle? But that's pretty limited in the information that it gives you. What really matters is where the market spends the most time and where it brings in the most volume. And that's what the market profile chart lets you see. Where you see more letters, clumps of large letters, that's where the market spent more time. Guess what? If a market spent a lot of time in a certain area, that is where it will probably spend less time in the future, right? So on this particular morning, the market spent a ton of time inside of here. Look at all these letters. Look at all these TPOs. Well, then look at the overnight. How much time did it spend in there? Very little. Reversed right back down. Look at the next day in the regular trading hours. How much time did it spend in there? Very little. Right? So if we know those areas where the market spends a lot of time, that's where we look for reversals. That's where we look for support or resistance. We look for the market to reverse. Okay? Same exact thing with volume. The market loves to go to wherever volume has traded in the past and trade there again. So of course, the market will chop and grind at levels where you have large volume nodes. Okay? So for example, this cumulative volume, this is showing us all the volume that is ever traded at these levels over here. Where did we trade on Thursday? Most of the day, most of the time, most of the volume up there. So by seeing time and volume on a chart, we have an edge as traders to recognize where are the areas where the market might choose to do business. And it'll be somewhere within a candlestick. That's the thing. It's not going to be exactly at a candlestick high or a candlestick low, or the body of the candlestick high or the body low. That's just opening and closing price. Where it's going to, have its reversals is where it spends the most time and brings in the most volume. And that's within those ranges. So that's why we look at it. It gives us a three-dimensional view of the information available. Any other questions from the chat? We got 6 minutes till the market opens. Hit me with your questions. Time Traveler says, good morning. Well, is it morning, Time Traveler? Or is time merely a construct? Does all time exist simultaneously? And we are moving through a plane of existence. I mean, you're the time traveler. You're the one who knows. So you tell me, is it really a good morning? Or is it just good this moment? Jay in the house. Good morning to you. Welcome. Noel says, don't forget to click the like button. Thank you, Noel. Appreciate you. Let me refresh my page and see how many likes we got. I'm showing 94 people hanging out and only 23 likes. So I get it. You guys hate me. You don't like me. You think I have a ridiculous face? Whatever it is, you don't want to push the like button. I hear you. I tell you guys what. Will you push the like button if the market tries to fill the gap and it can't and it starts to sell off to the downside? Or it fills the gap and it gets resistance around Thursday's low and then it heads lower? I'd be okay with waiting for your like until one of those two things happens. But if one of those two things happens, which is what I'm predicting here this morning, and I still don't get a like, I'm going to be so confused. I'm going to be so confused at the end of the stream. Street Salsa in the house. Good morning and welcome. Sam says, based on the order flow, is it likely ES might go lower to 52.35? Okay, so I'm assuming you're seeing a big node of liquidity sitting down there. Actually, nothing is jumping out to me specifically about 35 right now. But if you're saying, is it going to go down towards that section? No, nothing is jumping out at me at the moment specifically telling me that. So one common misconception that people have when they look at order flow is they assume the market will always go to whatever level has the most resting orders at that particular level. As a general concept, it's not a bad idea, right? The market is always moving towards liquidity. So if you're looking at a chart and you've got huge nodes of liquidity below price, one after another, maybe only one above, yes, it is more likely that that market is going to go lower. Okay, because there's just more liquidity to the downside and the market always moves to the liquidity, right? But when you see something like this, where you just have one level, one ginormous level with a ton of liquidity on it, just ignore it. That is a market maker. That is there for some reason. I don't know what it is. I'm not a market maker. I don't play that game. I don't understand what they're doing, but that is there for a reason. It is not there because those orders are actually going to fill if the market gets down there, and the market is smart enough to know that. So it won't fall for just because it is always moving to liquidity, but just because there's a huge pool of liquidity, it won't automatically move to that level because the market knows that a lot of it is spoofing and it's fake. My guess is somebody has put this here to confuse the day trading bots, right? There are computer programs that run intraday that just take high frequency, very fast trades. They're in them literally for 5 seconds. Like they're in and out and they're in and out, and they're in and out. And they just make a couple of ticks at a time and they're churning all day long, just making money, making money, making money, making money. And it leads to a lot of exact reversals, and it leads to a lot of days, quite frankly, like Thursday, where we just have tons of reversals at exact levels and stuff like that. If the market makers want the market to move, they want to get away from a price level because they will make more money if you move away from a price level. They will try to reduce the amount of those high frequency trading bots that are happening by throwing off the algorithms which use liquidity to execute their trades. So they'll throw in a huge amount of orders on some random level. And sometimes it sits there for like a week and it just sits there. And you're like, all week long, you're like, what is going on? Like, why is this huge thing of liquidity? And then finally the market will get down there, 4 or 5 days later. And then right before it gets there, poof, it disappears. And you're just like, what was the point of that? Well, it's far beyond our capacity. These are large players messing with each other, trying to manipulate the market in the way that will suit them best. Okay. So I would not fall for purely because there's a large amount of liquidity, the market is going to go lower. That being said, regardless of what the market does this morning, if this suddenly disappears or changes in some fashion, where suddenly they start piling on even more liquidity, it gets like a bigger, thicker, darker red line there, or it starts to disappear, one or the other, I would pay very close attention to what is happening to price at that level. So let's say, for example, the market fills the gap this morning. It opens, it pushes back up to 52.88, and it starts to spend time inside yesterday's range. Okay. And then as the market is starting to spend time and it's starting to bring in volume inside Thursday's range, suddenly this starts to taper off and it starts to disappear. Well, guess what's probably going to happen? Resistance, and it'll reverse right back down. Now let's say the opposite. Let's say the market pushes up there. It's spending time. It's bringing in volume, but all of a sudden this starts to get darker and darker and darker and darker. Probably we're going to have a sideways day where we just balance all day on the balance area high. Okay. So the way these things are super helpful is not necessarily making a prediction as to what they mean ahead of time, but instead observing what is happening with price action at the moment that something changes with the order flow, because that will give you predictions about what comes next. Okay, the market is open. We have a gap down. The first order of business for the market is to try to fill the gap. And that is the question that we are asking ourselves. Can they fill the gap? Can they get back to 52.86? If they can, do we get resistance there? And if they cannot, that would be bearish. And that would tell us they're heading for the overnight low at 52.38. It's a gap down. Another way that the Bookmap is just an incredibly helpful tool. If you have access to the MBO bundle and you have stops and icebergs, this thing can be very, very helpful. If you randomly see, and again, if you're seeing, large stop after large stop after large stop, that's not what I'm talking about. But if you randomly see one very large stop, in this case, 119 contracts, that means one account, one person just got stopped out for 122 shorts right there. Okay. Often that will be when the market makes a reversal and starts to go lower. So if you have a choppy sideways market and you're kind of trying to figure out where is the resistance, it looks like you got some resistance. It looks like you're going to turn around. And then you look over at the stops and icebergs and you see a huge stop got taken out at the high. Yeah, it's probably ready to start its down move. And the same thing at the lows. So that's another incredibly helpful thing that this software provides. Many, many times I've wanted to get short or long, didn't have the confidence, then looked at a huge number of stops getting taken out at an exact level and then thought, yeah, I can trust this trade. Okay. So as of now, I'm still looking for chop and grind. I'm looking for the market to pass through the opening price a few times while we try to figure out what the momentum is. And wouldn't you know, it just disappeared. We were literally just talking about this liquidity and how it wasn't real and it was going to throw things off. What made it disappear? Does anyone know? Passing back through the opening price to the downside. The market opened, started pushing up. They kept it there. Once the market came back through the opening price to the downside, they disappeared it. So if I had to guess what that means, it means we're going to probably spend about 20, 30 minutes chopping around the opening price here and then go for a gap fill. This convinced the bots not to go long at the opening price for the gap fill. So that sets us up later on in the day to squeeze and come back there. Ticks are significantly oversold. If you don't know what this is, the TICK chart, that is the actual name of the ticker symbol, is tick. This is measuring the number of stocks that are going up a tick versus the number of stocks that are going down a tick. When every single stock is going down, that is actually a sign that the market is getting oversold. It's going too far, too fast to the downside. So I do think we're about to get a look below and fail of the overnight low, meaning the market will poke below 52.36, and then we're going to turn around and come back up for that gap fill because the market is getting itself overly short, overly fast, and these ticks need a chance to cool off. They need a chance to bring in enough buyers to get back to that zero line. Now, once we get back to the zero line, then I can trust the selling. But for now, I think these sellers are not going to take profits quick enough, and then the market's going to turn around and it's going to pass back through that opening price, and then they're all going to get squeezed, and right when they do, we'll fill that gap. So we're now looking for a move to 52.39 and watching to see what happens there. Okay, new selling at the low. That's a little bit bearish to see. Very body. River Rock says, how about come back this week for more likes? All right, well, we got 140 people listening right now. I'll tell you guys what, if you can get us above 100 likes, I don't think I've ever gotten 100 likes on a Bookmap stream before. If you can get me above 100 likes, meaning 2/3 of you hit that thumbs up button, I will do another live stream this week for the public for free. All you got to do is push that thumbs up button. Hey, push that thumbs up button. Hey. Sook, good morning to you. Okay, so here's the test of this overnight low. What just happened? Big order of stops, 125 taken out. So this is the area where the FOMO shorts that are chasing right now, if they don't take profits and the market finds support and it comes back up through the opening price, what's going to happen to all these sellers that got us down here? If they haven't exited their trade yet, they didn't just take profits at the overnight low. What are they feeling right now as the market starts to go up? Right? So that, again, the market has to pass through the opening price. But if we pass through the opening price at this point, we'll get a gap fill purely out of squeezing these sellers. Let's see what happens. We still got an iceberg down here, so we're going to do another poke at the overnight low first. Try to get a few more people short right at the low before they reverse it. We're at 77 likes. Are there 23 of you that would like to see me live stream again for free this week? All it takes is pushing a button. No cost whatsoever. Good morning to Sook. Sheena says, Charles, when you say the ticks are oversold, how do you determine that? Above or below 1,000. So my software just automatically puts these little red lines here. But if you see the ticks above positive 1,000 or below negative 1,000, that is a sign that the market, and this just means like very short term, like over the next 10 minutes, like just very, very short term for this moment, the market is a little bit oversold. That doesn't mean the market can't keep selling off all day, right? We re-entered a bounce area. The highest probability is that we're going to sell off all day and we're going to continue lower. But it just means we can't really trust any resistance that we see until they've had a chance to cool off. Now, there's two ways that the ticks could cool off. One, we can just go sideways. If we just keep grinding and grinding and grinding and grinding long enough, eventually the ticks will work their way back to the zero. Okay? Or we can have a sporadic move in the market, like a look below and fail of the overnight low, that then comes back through the opening price and then squeezes all those sellers, which will, of course, create FOMO. And then before we even get the gap fill, those ticks will be back up through that zero line. And that would set us up as day traders for a much better trade, right? We could trade the first pass through the opening price to get to the overnight low if we'd have gotten in quick. We can trade the look below and fail back up. We could wait and be more cautious and trade when it passes through the opening price for the gap fill. We could sell resistance at yesterday's low once we filled the gap. I mean, there is just trade after trade after trade based on two simple principles, right? One, we have a gap, and two, the ticks are oversold. So even though it's a gap down and that's a sign of momentum down and that's telling us that the market is likely to go lower today, those ticks are telling us first we need a bounce or to grind for a while. So we don't need to FOMO into shorts down here at the low, even if we think the market is going much lower, because we're either going to get a bounce with price and then we can get short at the gap fill, or we're going to spend, 30, 40 minutes grinding here and we can get short whenever the hell we want. But either way, we don't want to chase shorts to the downside when the ticks are oversold because they need to cool off. It's just the nature of markets. They got to chill and give traders a chance to catch up. Clay says, thoughts on crude oil? I'm seeing it break above a recent moving average back towards 69.30. We'll take a look in just a minute. Let's see how we handle this this overnight low, and then we'll take a look at the crude. There is both an ability to love and hate icebergs like the one we've got at the low. This iceberg right here at 35. Okay. Why do we love it? Well, we love it because it tells us that the market's coming back to the low sooner or later. Now, it doesn't necessarily tell us whether we're coming back in 2 minutes or 2 hours, but it tells us as long as this iceberg is still here, the market knows there's liquidity at the low and it is likely to come back to it. How is it frustrating? Because of that iceberg, I can't go long for the look below and fail because I know we need to spend at least one more little poke down here. And there's a chance we head straight up and fill the gap and that remains there, while we head up to fill the gap. If that were to happen, if the market were to head up and fill the gap and that was still there, it would be the greatest gift on planet Earth, because then I would feel like a king going short at the gap fill. But these icebergs can be tricky because you can't really go long as it's there, because you know the market's coming back for it. You just don't know when. Yeah, they're trying to flip this thing right now. See how they're adding liquidity here? So they put in their iceberg. They put in some liquidity. It started to scare price away. It was working. But now as price starts to roll over and come back down, what are they doing? They're adding more liquidity. So they are trying to turn that into a magnet to shove price back up. And so far, it ain't working. Look at these bots. One after another after another. Look at all these icebergs. They're just trying to stop this market from dipping back below that overnight low. They're giving everyone a chance to FOMO into a short at the low right now. They're making it look like the market is going to tank to the downside so that you get short. Okay, so how we handle this iceberg here at 52.35 will play a big part in what to expect for the rest of the day. So far, we have momentum down. We opened with a gap down. That gap down became a gap and go, which got us to the overnight low. And as of now, we're getting new selling at the overnight low. Each one of those, one step at another, are the market telling you bearish, 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 bearish. So here's where they could squeeze everyone. If they just barely poke down here and then reverse back up, they're going to squeeze all these sellers going short right now. If we poke down and get new selling, then this market is going much lower for the rest of the day. Which is it going to be? To reverse or not to reverse? This will be a great moment to take a look at those ticks and see if they were able to get to the zero line. Still oversold. So to try to re-explain this, for those of you that are kind of like, Charles, you're saying so many different things. It's really confusing. Let me try to just go back to the basics and we'll explain it once again. Bigger picture, I think the market is going lower in the days ahead. I think it's going all the way down to here, okay, to the balance area low. Intraday today, at this exact moment, I think they're trying to fake everybody out first. I think they're trying to get everyone short right here. Then they'll reverse back up again, take out all those shorts. Then they'll come for that bigger move. So I have a very hard time trusting this resistance at the overnight low, even though bigger picture I'm short. Bigger picture I'm bearish. You know, right here, it feels like this is to trick short-term traders. Get them short at the low and then reverse on them. So I'm watching this resistance like a hawk. And the NQ is in exactly the same place, overnight low. Oh, these icebergs, all the icebergs. They are berging it up. So is that it? Is that our look below and fail? No, sirs. They're going to take another poke. Look at those icebergs. They haven't quite gotten everyone short yet. That's 100 likes. Boo, 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 boo. So as long as nobody unlikes, as long as nobody hits it a second time, we're good. We'll do another live stream today. Unfortunately, I can't run the survey setting because I'm streaming through Bookmap's channel today. But if you guys want to write in the chat, what day this week would you like me to go live? And whichever one visually looks like it got the most votes, I will do that. So let me know in the chat, what morning this week would you like me to go live on the public YouTube to hang out with you guys? You earned it. You pushed the button. Steven says, I've got a question. I recently started using Bookmap. Awesome tool, but how can you make it cleaner? I trade cryptocurrencies, and the problem with crypto is can you make Bookmap cleaner? Unfortunately, I'm not the guy to ask that question to. I'm just a trader that uses Bookmap. But I would highly recommend you reach out to Bookmap support and ask them about that, because I bet you there's a way. So when you say cleaner, the problem is in the crypto market, the order books are very thin. Okay. Also, in the crypto market, each exchange has its own order book. Okay. So the difference is, if you're talking about the futures, the ES futures that we're trading right now, it doesn't matter what broker you're going through, what platform you're using to trade on, anywhere on earth, every single person who is putting in a buy or a sell order comes up in one order book. It comes up in the ES order book. Okay. So when we look at that level 2 volume, we are seeing every trader on earth who wants to participate in this market. We're seeing what they're doing. That gives us an edge in understanding what's happening. In the crypto market, you may have a certain cryptocurrency that on your exchange may have very low liquidity or may not have liquidity above or below price or whatever the case may be. But on other exchanges, so like maybe you're trading on Gemini, but on Coinbase, the volume is completely different because they have their own order book, and that makes things very confusing. I don't personally know how to do it, but I know with Bookmap, there is a way to combine all the exchanges together. You can put in all the different exchanges and you can get a combined look at an asset. So what is Bitcoin, not just on Coinbase? What does that order book look like? What is Bitcoin on Coinbase plus Gemini plus Kraken plus, on and on and on, all the other exchanges. And then you get a better look at the real desire of the participants. But again, I can't teach you how to do that. But if you reach out to Bookmap support, I'm sure they'd be happy to walk you through it. Okay. So here we go. We finally got rid of this iceberg. Now we look at the ticks. Do they go up or down from here? Do we get a bounce, which would cause a reversal? Or do we get ticks going down, which means more new selling, which means bearish, which means the move to the downside will begin? What will the ticks tell us? Buyers or no buyers? Okay, for now we have the buyers. More chop on the overnight low. Dun 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 dun. Okay, so the way I see things now, earlier I was thinking we were going to get a look below and fail. That would get us a move to fill the gap to the upside. I don't think they have the buyers for a gap fill anymore. So I would say the look below and fail is now targeting a test of the halfback around 52.48 to 52.50 area. Resistance there causes continuation lower. So I would describe myself as bearish and assuming the market is going to keep going lower as long as we stay below the opening price at 52.57. I don't think we're going straight down. I think we're coming back up once more. These ticks still haven't made it to the zero line. So they may do a little liquidation and then come back up again for that halfback. But this is bearish to see. So as long as we're below that opening price, continuation to the downside is the highest probability today. As far as downside targets are concerned, the first potential support is around 52.10. I would look for a bounce right in there. There's a little bit of support around 51.80, but quite frankly, if we get below 52.10 and we get new selling down there, we got a lot of single prints. Remember, why did these single prints happen? Because Trump announced tariffs were coming to an end. The world, or we're getting paused. The world felt relief. There was so much fear and anxiety and uncertainty and anger and you know, so much emotion in the markets. And then he said something which gave everybody a deep breath, a sense of relief. If we start to get below 52.10 and get new selling there, there's no reason why we don't have to go backfill those single prints all the way to 50.90. And I know that's like over 100-point move and that seems insane, but it is possible. Which is why I'm a bear. Bear. We do not love the look of these lows with these icebergs. This is not a natural move for the market. So I know your patience is wearing thin. I've promised you a bounce into resistance, and we haven't got it yet, but it's coming. This market is doing a beautiful job again and again and again of getting new traders short right at the low. Okay. So now that we've printed the B period, as I've said, I'm looking for a bounce here around 52.10, and then for the market to come back into the overnight low around 52.40, and we will look for resistance there. The fact that we've spent most of our time and brought in most of our volume, at the overnight low, has now pulled the blue box all the way down to the low of the day. That's what we call the value area. That is a sign the market wants to continue to go lower. So again, even if we get a bounce here, it is just a rip to sell, not a dip to buy. Okay? Because the momentum is to the downside. So then you say to me, well, Charles, how long will the momentum to the downside last? Well, re-entering the previous balance area only tells us that in the days ahead, the market is likely to go lower. Okay. So the fact that we're back inside the blue box right here, and, we're spending time and we're bringing in volume. That's what we've done so far since the market opened. The whole morning we've been down here. That significantly increases the odds that we're heading to the opposite end. It doesn't tell us how quickly we'll get there. So we could do it in a day or two, very quickly. During these very volatile times, we tested both ends in one day, multiple days in a row. So we could technically get down there today. But I would feel like we need some sort of news-driven event to cause that. Otherwise, it might take 2 or 3 days to get to the downside. But as long as we stay now below today's opening price, I'm as bearish as can be, folks, for the days ahead. With that, I must say goodbye. If you are a member of the brigade, if you trade with us in our room, head to piratetraders.io/live, and then we will see you in that live stream. If you are not a member, head to piratetraders.io/join and join the brigade. It's only $20 a month, and you get these live streams all day, every day. Well, for the first hour every day. If you're looking to learn how to trade, if you're new to trading, or more importantly, if you've been trading for a while If you've been trading for 6 months or even 6 years and you feel like you're treading water, you feel like you know what you're doing, you understand the market, you should be making money, but somehow you just can't quite break through to that consistent winning, I recommend you take my workshop. You can find that at marketsandmind.com. You just head to marketsandmind.com. It is an all-encompassing workshop. Whoops. You scroll down there, you just click on that, and then you sign up. Okay. It's going to be between May 12th and 23rd. So coming up next month. It's 4 hours a day for 5 days a week, 2 weeks in a row. If you can't watch the sessions live between 9 a.m. and 3 p.m., you can watch the recordings later. It's totally fine. You don't have to be able to watch it live. And I teach everything from the top down, every single thing you need to know to be a trader. I teach how to read charts, including, market profile, bookmap, market internals. I teach how to manage risk, how to learn to think in probabilities, how to hone your intuition so that you can be successful. This course will put you on the right path to success. And the very last thing, okay, so looking for support right here. Very last thing is let's just see what day got the most votes for me to go live. We got a Wednesday, Thursday. We got a Saturday from Frito. That would be an exciting stream. Yeah, it looks like Thursday is the big winner. So I will also see you all on the Piratetraders YouTube channel on Thursday morning. Have a great day, everyone. Head on over to Bruce's stream if you're not a member of the brigade. So once again, looking for a bounce right here at 52.10 that comes back to the overnight low, 52.38, and new selling there is bearish for the next move to the downside. Bear. Bear. If I did not get to your questions, write them in the Discord and I will answer them later on today. Thanks a lot. Bye.